Hey everyone, welcome back to the Market Stalkers channel. About a couple of weeks ago, you saw me get interviewed, but this time I'm the one doing the interviewing. Joining me today are the founders of a new online prop trading company that is set to ruffle some feathers in the industry. Please welcome James Thorpe and Steve Miley from TradeView. Steve, James, very pleased to have you here.
Yeah, thank you for inviting us on.
So Steve, where are you located? Where are you coming in from?
So I'm coming in from the UK. I live between London and Cambridge in a tiny little village. I'm up that way near Stansted Airport, if anyone knows Stansted Airport. So I'm not a million miles from there.
How are you dealing with the heat wave?
I think there's been a lot of like hot air, to be quite honest. I mean, it's been hot, right? It's hot. We all know it gets hot, and just be sensible. And it's cooling down there, but it's been. It is
a little bit, yeah.
It's been
a bit. The last 2 days have been a little bit bad. James, where are you joining us from?
Chicago. Well, it's actually, I would say Chicago, but it's the first suburb north of Chicago, a city called Evanston. So so I moved here in 2016. It can get up to those temperatures, but we're pretty well set up for it. You know, we have air conditioning in our houses here, so and air conditioning in taxis and in buildings, and it's not a problem. But it hasn't been as hot this year as you've just recently experienced. So we're pretty lucky like that.
Yeah, wow. I mean, this heat over here in the UK, as you know, it hits differently. Yeah. All right, so let's start with your backgrounds. So James, you were a prop trader in Chicago, is that right?
Actually, I got started in the industry in London, and that was in the early 90s. That's actually where I met Steve. I made my first trade on the live floor, the London International Financial Futures Exchange, in April 1994. I was a backed-funded trader, and I held that position for about 15 years. I traded all the way through to 2009. So saw the transition from floor trading to on-screen trading. And then in 2009, I was offered a role in business development at Life, the exchange itself. And that took me around the world working with prop trading groups and hedge funds and banks, really sort of the mandate was to increase volume into the exchange, but my approach was to sort of try and train the traders on the strategies that I was using and the products that I traded, and then try and improve their trading with the view that would help them, that would drive an increase in their trading into the exchange. That lasted about sort of 2 years before I was offered a job managing a proprietary trading group, and that was actually in Shanghai. So in sort of late 2010, I found myself with my wife and my 1-year-old son in Shanghai, where I stayed for 4 years and helped that proprietary trading group build that Shanghai office, Beijing. We actually opened a third office in a city called Wuhan, which no one's ever heard of until 2019. And then in 2014, they asked me to become CEO of the company for a 2-year contract down in Mauritius. So I was in Mauritius for 2 years. And by that time, Mercury Derivatives was a fairly significant operation. It was about 11 offices, about 700 traders. And we were trading around sort of 250 to sort of 280 million contracts a year. So it was one of the world's largest sort of day trading, futures day trading groups. And then when that contract was up, my wife, who's American, I was able to fulfill a family goal, which was to come and live in Chicago. And since I've been in Chicago, I've worked for a futures market making group and a couple of other smaller startups and done some consulting. So that's kind of like my background in sort of 5 minutes.
So you're not new to building prop desks around the world and training people and stuff.
No.
Wow. Yeah, that's amazing.
I've been still doing it for about 12 years now.
Yeah. Amazing. Steve, what about your background? Because I know you ran Market Chartist for a while. Is that still going on?
Yeah, Market Chartist is still ongoing. So that's like a boutique research company where I provide technical analysis research, do some fundamental stuff as well. I also have an affiliate site called FX Explained that provides lots of education. So that's what I'm concentrating on at the moment, alongside a key role here in TradeView for the last year or so as we brought it to market. Before that, James and I met on the trading floor back in the 90s. I carried on the trading floor with Merrill Lynch, soon to become Merrill Lynch Bank of America, through the financial crisis. But I spent 15 years of my career at Merrill Lynch, and I segued. James did that transition from trading into on the actual trading floor into on the online trading, where at that point, when that happened, it came off the trading floor. I moved from being a broker with Merrill Lynch to being a research analyst. And that's where I honed my skills. I had a great mentor called Tom Hobson, who's unfortunately no longer with us, who taught me the ropes on technical analysis, which I've been using as a broker anyway. And then I forged a career as a research analyst. So a lot of my career has been on the research side. But I've always kind of, where I was allowed to, because obviously with banks, you're limited in what you could do. But I could trade, what I could trade, invest where I could invest. And then more the last decade, since I've had my own company, I've been able to do what I want. So I've honed those skills. I did some day trading. I'd rather be really frank and honest and say, actually the regime of day trading, keeping it that tight, I found quite difficult. So what I kind of moved across to is more of a swing trading kind of approach. So, but all the analysis is the same, really, just on different time frames. But it just allows me that kind of, well, you've been doing it for a long time.
So the time frame just allows for maybe better returns because you don't have that day trading time constraint.
Exactly, all of that, and it allows me also to concentrate on doing things like this. Running trade day, running my other businesses, and for me, swing trading just allows me a little bit of a step back. So that's been my journey from really being very institutionalized for, I guess, 15 plus years, maybe 20 years of my career. 20 years of my career, 15 years at Merrill Lynch on the institutional side. Very high level as a director at Credit Suisse when I came out of that side, and now to running my own business, which I've loved. It's been a massive learning curve, and you'll know all about that, right? But it's interesting. It's like the Wild West compared to working for a big investment bank. But
you have to wear a lot of hats all of a sudden.
Exactly. So and you can wear a t-shirt. Yes,
exactly. That's the best thing. No dress code. So trade day, you guys differ quite a bit from all of the other prop companies out there. You have some pretty awesome rules. So tell me what happens after a trader passes a trade day evaluation. Let's ask James. So what happens?
So I mean, this goes to the core, I think, of what makes us a little bit different, aside from our experience and like the leadership running trade days. But we actually fund traders, and we actually fund traders with our money. So when we were looking around the space and thinking, how can we add value, or is this something we want to get into? One thing that struck me in particular was sort of the lack of transparency, and there was this some people handing off to funding partners. And you had this situation like quite prevalent where people aren't funding people at all. They're actually putting them into a simulated trading account. And that struck me as a huge conflict of interest between the prop trading firm and the trader. Because, if that trader starts to make money, that prop trading firm is then losing money on that trader because they have to write out a check up from their own account. And it, coming from the professional trading world, where there isn't such thing as like a sim funded account. Everybody goes through some kind of training program, some sort of evaluation process, and then they're given capital to trade. And if that person does well, they're given more capital to trade. And kind of that's the experience that we wanted to bring to this space, and that's what we thought was sorely missing. So we decided to do it, and like it would be done in a professional trading environment.
So that's the path that I took. So I went for an apprenticeship. They taught us how to do profile and some parts of technical analysis. But by the time that I went into intraday, I was already like swing trading for 5 years, so it's not like I was new to it. So I was able to adapt stuff very quickly. But that was the thing. There was just a sim part when they're testing out to see whether you're a complete lunatic or not. And if not, you get a funded account, and then from there on out, you're supposed to be a funded trader. So and now there's been like a twist, and that's actually a common critique of the online prop firms that they don't really care much about the trader, but instead they're just after that revenue from resets. But trade day is not after that, because actually one thing that stuck with me when I was talking to Steve at first, you said there was a person who kept doing multiple resets per day, and you guys actually told them to stop and to go and maybe learn more. So Steve, can you tell me a little bit about that?
Yeah, without going into obviously too much details,
Yeah.
but we do see like a behavior which is bordering on gambling,
Yeah.
and there's two things here. One, obviously, in the long run, we don't want those people to come through and be funded in some respects, or not trading like that, but if we can guide them to maybe how to trade in a better way, then then it's a win for them and it's a win for us. We see a lot of people, as James puts it, to use like an American sports analogy, like swinging for the fence. They want that
YOLOing.
big hit. Yeah, that whole YOLO thing, right?
Yeah.
And let's face it, it does work every now and then, but we're talking like probably 1 in 100,000, maybe, a guy who maybe swings for the fence and hits it 3 times and all of a sudden he does really well. And obviously he's the one who gets all the social media coverage. Our view was, this guy was not, probably doing it, and approaching it as not only for his benefit, for our benefit and for everyone's benefit, and maybe an intervention was correct. So one thing we haven't mentioned is we do some, particularly on our advanced program, we have a mentoring part of that program. So that's a 50-minute check-in to an hour check-in once a month with one of us. Sometimes if we feel that the person needs it, we'll give them some more love and some more time. We'll see as we scale higher, to bigger levels, whether we're going to be able to do that. But I mean, as you know, you can have the best strategy in the world, you can have the best approach in the world, but so much of this game is psychological, and if someone's not coming at it with the right psychological approach, and is doing that YOLO, swinging for the fence, then in the long run they're not going to succeed, and in the long run as well they're going to do themselves not just harm with respect to their financial situation, but mentally it's not good, and
psychological traumas get created, and it becomes very difficult. Whenever somebody comes to me with psychological traumas for coaching, because I run a little educational department as well, and it's always they're always the toughest people to deal with, because they have these ingrained habits that are inherently bad, and now I have to almost undo all of that conditioning so that they kind of start again, and it's so hard, so difficult. So I definitely understand where you're coming from. It's interesting that you mentioned mentoring and that you guys are working to support people as well. So how deep does that actually go? So if you see somebody, let's say they get into a drawdown in a funded account, would you reach out to them, or would they have to reach out to you? At what point would you go, hey, oh God, you're getting yourself into a bit of a trouble here. Why don't we have a chat? Like, how much of that would go on?
So I'll answer that one, Steve. So what we see, we have people that come to the program, right, that they know what they're doing in terms of they've been through a few of these programs before, and they're just looking for funding, and they don't need or don't want our help, right? And they're not looking for it, and we don't want to be too intrusive, obviously, and push them. But for those that are, we're more than happy, particularly like when they're funded, because they're trading our money, right? Now we're aligned. If they lose money, it's our money they're losing. So we will definitely, what we do every time someone gets funded, the first thing we do during the account opening process is we email them, say, hey, do you want to have a quick call? You're about to go through a very difficult, important challenge in your trading career, which is this sim to funded drop off in performance that every trader faces. And we have some coping strategies. We can talk you through it, mentally prepare you for it, whatever you want. If it's there, if you want it, right? We're not forcing it on them or pushing it down their throats, but if they want it, it's there. And we find most traders are responsive. And also at that stage, what we can do is if you pass, let's say you graduate from the advanced program onto a funded trading account, we map those risk limits, and the daily stop is $1,000, right? But a lot of traders obviously don't want to lose $1,000 in a day. So what they'll say to us at this point was, we can set a self-imposed stop, $200, $300, $400, $500, whatever it might be. And incidentally, if they break that while funded, they don't lose the trading account because it was a self-imposed stop, right? So it helps initially just to have that initial contact, say, hey, what sort of risk limits would you like us to set up within the trade day risk limits for you? And then we'll take it from there. And then what happens typically, is if we see somebody struggling, we'll just fire a quick email off and say, look, can see you're struggling, you want to have a quick call. Again, some people don't, and some people have got their own strategies, and they just, a lot of it, unfortunately, is just swinging for the fences as well. They're like, they're no interest, unfortunately, in.
So what would be your advice to anyone going through that kind of new funded account jitters, to trade smaller than they did in the challenge, or to be more risk averse, less trades? Like, what would be your approach?
Yeah, so it's actually very difficult, because you don't want to. If a trader's passed the challenge, then they've taken a certain approach that's worked for them, right? So you don't want to be sort of implementing and changing that for them on the day that they get funded. But what we kind of say is, look, first of all, you're no different. Every trader goes through this, right? Every trader is going to find it difficult going from sim to funded. There is
it's normal. It's a mental adjustment.
It's perfectly normal. What we suggest is just take your time and be a bit more selective, right? Mm-hmm. If you are, let's say you're on the advanced and the trading drawdown's $3,000, you don't want to be hitting $800 a day daily stop, because you've got 3 days and you're out. 3.5 days and you're out. Take your time, step back. And one of the key things here is to stop thinking about earning money, right? Because a lot of traders, if this is the first time we speak to them, what we always hear is, I just want to make $300 a day. I want to make $500 a day, right? Stop thinking in terms of money. Start thinking in terms of ticks. And when you start thinking in terms of ticks, it's much easier to trade, say, micros versus minis, right? Because you can map your same strategy into a micro contract than a mini contract if you're used to making, say, 30 ticks a day, right? And then so you're like, okay, I made 30 ticks a day. Well, that was a good day. Even though it was only $30 in micro as opposed to 300 in the mini, that was actually a good day. You achieved a good day trading in 30 ticks. And then we can try and build on that and try and make 40 ticks and 50 ticks, increase the sizing. But if people are thinking in terms of cash, they're like, well, I was used to making $300 trading minis, and I want to try and make $300 trading micros. No, it doesn't work like that. Now you're skewing your whole risk reward. You're taking on far too much risk to try and take money out of these micros. So, what we try and do is get the thinking straight. Right, this is a marathon. This is not a sprint. We want to see you succeed. Give yourself time to succeed. Give yourself time to get over this psychological hump of now trading real money. And we can worry about scaling your trading later and growing your trading. And the way you give yourself time is not to risk too much money every day.
So scale down, be more selective about the types of trades you take. Yeah, that's some great advice. So let's assume that the trader does survive the jitters. Yeah. Let's talk about payouts, because you guys don't have any gated withdrawals. So, Steve, why don't you tell us a little bit more about that? Is there any kind of minimum balance that you guys want to see before a trader can withdraw some money?
The only limit we have is you have to be obviously in profit. You can't draw down into the drawdown. So as the drawdown rises, as you go into profit, you can take out what you want.
So let me just get this 100% right. There's no minimum balance. Is that what you're saying? If your account is above zero, you can actually draw down some money.
Yep. But then obviously
that's very different.
Yeah. But obviously then that is eating back into
of course.
your drawdown. Yeah. Because obviously your drawdown is rising as you build the account. So yeah, and from day one you can do that once you're in profit. The other thing is to say that it's the first $5,000 the trader keeps. After that, it's an 80-20 split, clearly obviously in their favor. But what I think is really important to say is, and it's a big belief of James's, and it's how James grew his accounts back when he was trading on the trading floors, as we've discussed before. And it comes from his mentor. The only way to be profitable in the long run is to grow your account. And you grow your account by leaving funds in there to be able to use those funds to trade from, effectively. We allow you to increase how much you trade as you expand your trading account. Now, if you keep drawing down into that, then you're not going to be able to trade more and grow that account. So I think this is important to say. So we do have that chat when we go through that transitional from sim to funded, and we have that call. You know, we appreciate people might need the funds to live, you know, but if they've got that far without those funds to live, then we would strongly suggest leaving the funds in there. They're still going to be in there. We don't have the rule. Now, I think I'm pretty sure this is different to some of the other companies in there. If you break the rules, you know, and you're in profit, we are not at that point going to then say that profit's not yours. That profit
Interesting.
is still yours, right?
Yeah, because with every other company, you break a rule, you're out.
This is obviously why people at the other companies want to know, can I get my money out? Can I get my money out? Because they don't want to leave anything in there in case they break a rule, right? No. For us, the view is, you know, if they've made $4,000 and they break a rule, obviously they're out. You can't trade on it. You've broken the rule. You know, you maybe put our money at risk, but that $4,000 is still yours, right? Now, obviously, there might be some costs and fees to come out, but you've earned that. Why should we keep that?
That is completely different from every single prop company out there. And I'm funded with 6 of them. So, yeah, nobody has that rule. So that's absolutely amazing. Now let's talk about, because you mentioned scalability and how you guys give more leverage, the more profit there is in the account. And I did see that on the website as well. Now, what happens to the daily loss limit? Like, do you guys keep the daily loss limit? Is that negotiable? Does it get removed at some point?
We try and make it like very easy and straightforward. And I think, you know, for a lot of your savvy audience, it will be straightforward. But for newcomers, it might be a little difficult to understand. Essentially, the trading maximum drawdown freezes when it gets to the starting account balance. Okay. And at that point, we also remove the daily stop. So, if you were on the advanced program, the trading maximum drawdown is $3,000. So once you've got to $3,000 in profits in your account, the trading maximum drawdown freezes. So then you can go up, you know, you can make 20 and come back down to 5. And the daily stop gets removed as well. I mean, it doesn't make sense to keep a daily stop in there of $1,000 if a trader has $100,000 in their account and they're trading 30 lot E-mini S&Ps. So we actually freeze it there. Obviously, we won't allow the account to go back below 0 at that point, and it will be auto liquidated and you'll lose your live trading privileges if you hit 0. But that's what we do. Now, one thing, you know, I want to touch on, which I touched on earlier on, what we tend to find again is that traders are like, you know, they need help protecting themselves from themselves. You know, that was when we were in professional trading groups. You know, that's the job of the risk manager or the head of desk, is to help that trader protect themselves from themselves. So, you know, if somebody has $10,000 in their account, technically they can lose $10,000 in a day unless they have an auto liquidation stop in there protecting themselves if they lose connectivity to the exchange or they lose control of themselves, whatever it might be. So we'll be working with traders, you know, or we work with traders certainly to, you know, they say, hey, you know, just email us, can you put my daily stop at 2,000?
Right. So do you insist on stop losses, or can traders kind of decide whether they're going to use maybe a catastrophe stop or whether every trade has to have a stop loss? How does it work with trade day?
No, it's what we call an auto liquidation daily stop. So it's just like,
so you don't have to have a stop loss as long as you're in with that maximum drawdown and daily loss limits during the evaluation, but after that, just the maximum drawdown and auto liquidation. Okay. Can you share some future plans for trade day? Because you're talking about like a lot of support to the trader. And I know that Steve mentioned that at some point you're planning like some kind of a community support portal as well. So have you guys given that any more thought? Is that actually coming? How far did you get to that? Let's try Steve on this one.
Yeah, well, at the moment we have a whole they have our email, right? So people email in. We also have various forums and a chat facility on the site. So that's kind of already in there. We're also looking to speed that up a little bit to actually then do more of a social media / Discord server type forum. So that's all in process. The only concern we have about that is, you know, monitoring these things. You know, they can be quite labor intensive, and unfortunately some people do abuse the freedom that those kind of servers have. So it's something that we're trying to bring in. It's something we think is going to be really useful. And then it's also just the fact that it's just a kind of another add-on of support to, I'll just kind of segue off and talk a little bit about the, all the educational resources we have. We have a huge amount on the site, from psychological coaching podcasts from, an Olympic coach called Steve Ward, who now coaches at various hedge funds and investment banks, is renowned throughout the industry. We have a live squawk feature from Live Squawk. So that's a live audio commentary from an old colleague of ours. Provides that. So that's been a business that's been going 15, 20 years, and they're very, very successful at Live Squawk. We have a whole host of educational videos, whether on technical analysis, risk management, and then just real basic intro stuff like, what are futures, because a lot of our users come on and they don't really know, they come from maybe the CFD world, we know very well. And exactly. So, and there are some nuances. So we have all of that. We have the forums. And then I think the best thing to me to do here is to pass across to James to talk a little bit about a couple of other things we have going on with, because at the moment we have TRADOVATE as our main platform and a broker. And we also have, you can plug TradingView into that. But I'll let James elaborate a bit more on a few things we have in the pipeline regarding platforms, but also changes to some of our micro minis and a few other things we have going on.
Yeah, so I mean, we launched in November 21, D, and it was a it's a bit of a it was a lot of work. It's a lot more than we were expecting, and what we've been trying to do is sort of stabilize the technology and stabilize the platform, run some people through evaluation programs, run some people through funding, see how it all works, and we're getting to the point now where we're really starting to understand our customer. There was coming into trade day, I had this misconception that the vast majority of people on our platform will be brand new to trading, and what we're actually seeing is the vast majority are not. They're somewhat educated on trading and most on futures. Some come from CFD world and crypto and things like that, but most on futures. So we're starting to really understand our customer and what their needs are, and we're trying. This now helps us evolve the platform from here. And in the last sort of 2-3 months, we've experienced a significant level of growth. And from that growth, we've got a lot of feedback about, perhaps where we're falling short, or, where we want to form our evolution next, our next stages. So a couple of things right now, because of the restrictions of TRADOVATE's evaluation platform, which TRADOVATE's our broker, and I'm not sure if your audience are familiar with it. I can talk.
I'm pretty sure most of my market stalkers they know about TRADOVATE. Yeah.
Okay, great, right. So it's a web-based application, Android, iOS. Mac, Windows. It's a very, very flexible, but but that's the only platform we support at the moment. And the restrictions on that, on the evaluation side, mean that we can't distinguish between micros and minis. So at the beginner program, the maximum position size is 2 lots. At the advanced, it's 4 lots, which scales for every $1,000 you make. But they are the initial maximum position size, and that's micro or mini, right? We don't have this equivalency where you can do 20 micros or 2 minis. So we'll have to do an internal technical fix where we can allow that and cross risk manage that. And we're working on that, and hopefully that will be fixed or completed in the next sort of 2 to 3 weeks. So that's like one thing that people were saying, we want to be able to have the flexibility to trade more micros, right? So we listened, we're doing the fix. It's underway now as a project, and it should be finished within sort of 3 weeks or so. So there's that. The second thing is that we're going to be offering Ninja. And not only are we going to be offering Ninja, we're going to be offering NinjaTrader interoperability. So we're going to be one of the first people to do that, which basically means the Ninja traders who love Ninja and trade on their Windows desktop will be able to go to Starbucks and check their trades on the TradOVATE platform on their phone. We're not developing that.
Yeah.
Actually, what happened is Ninja bought TradOVATE.
Yeah.
And
so they've done it on the back end. I see.
They're working on it now. They told us it'd be ready this month. It's not. So we don't know when it's going to be ready. Yeah. We're hoping.
We've had our dealings with Ninja because I own a technology team as well, and we actually approached them years ago when we were just starting out, and we were basically asking them whether they would be willing to support the newer C# versions. They were like stuck on some really old version of the coding language, and we had all of this like new ideas and stuff that just would not be able to get implemented without the new technologies that have come in. And they just said, There are no plans. So I'm a little bit I'm not that happy with Ninja, but buying TradOVATE, I think that was a very, very good business decision on their part, especially because recently all of us who have accounts with various companies, we've noticed more and more problems with Rhythmic, which is the feed that they use. Recently, I think it was like about a week ago or so, we had a very big mess up where everything just went down. Everything went down. So I was like, what is going on? And there was nothing they could do because it was actually Rhythmic feed that went down. So that's a huge problem. You know, we have so many prop firms now on the Rhythmic feed. And I think it's kind of crashing and overloading their system. So obviously seeing more companies coming in with a different kind of platform, that is definitely beneficial for the entire industry.
That was one of the reasons why we chose TradOVATE, because of the stability of the CQG data feed. You know, but we're excited about being able to offer Ninja because we have a lot of people interested in what we're doing as a prop firm, wanting to join us. But what's holding them back is the fact that we don't have the ability for them to use Ninja, which again will be changing. But we're very much on Ninja/TradOVATE's timetable on that. We're ready to go. We're just waiting for them to release that update. So there's that, and then so that, you know, kind of responding to feedback a little bit there, being in the right place at the right time as well, having had TradOVATE as a platform initially and Ninja buying it, and then the sort of third aspect to it is, you know, Steve and I looking at our platform and thinking, you know, what can we do differently to help our guys here. And one of the shortfalls that we feel with our platform is that, you know, traders come to trade day and they take out a membership and you're being evaluated immediately. And some people aren't ready, but they want the resources on our site and they want to attend our morning meetings, get the squawk, get our daily research, whatever it might be, and practice before they go onto before they go onto an evaluation program. So we want to implement some sort of like initial step, which we're working on. And what we're also thinking is those that have actually struggled to become funded but want to continue to stay with us or practice can step back to that, you know, sort of much cheaper entry point and reassess their trading strategy, try new things. Okay, now I'm ready to attempt to be funded again, go back onto the evaluation. So that's like another thing that we've got in the pipeline.
So that's a lot more similar to kind of the old style apprenticeships, only it's all online. So that's what I've been through. So you go into a prop firm as an apprentice, and then you're first taught some of the common tools that all pro traders use, and given typically about anywhere from a month to 3 months, depending on the program, before you're even put to try out for the proper funded account. So it's interesting that you guys, obviously you guys come from the industry, so you know how it used to be, and you've managed to model your company in all the good ways. And I also want to say, I've just been looking at the website and stuff. You have end of day drawdown over the intraday trailing drawdown. So that's another huge complaint that I get from people who are doing some challenges from your competitors, like from Apex or ETF. They always go, oh, but only if they did not have the intraday trading drawdown. Yeah. Well, here you go. Go to trade day.
For us, you know, there are nuances to the program that we find that people really like, and that's a very important one. You know, for us, it doesn't make, you know, as traders, you're a trader, D, you know, an intraday live trading drawdown doesn't make any sense whatsoever, right? As a trader,
because it's open equity. Yeah, right. It's not yours.
You get in a position, and that position you could get super lucky, breaking news, whatever it might be, just like rallies right on side. But before you have a chance to cover it, it starts to pull back. You know, why are you punishing a trader for catching a lucky break? I touched on the conflicts of interest of a sim funded.
Yeah, there's definitely one of those.
But you know, but it doesn't make any sense to us as traders. So we decided to implement on the evaluation and on the live account an end-of-day trailing drawdown calculation.
Everything that I've heard from you guys, you both come from very, very reputable backgrounds. You have loads of years experience. James, you mentioned life exchange. So is there any plans? Because I have a lot of Australian and Asian traders that can't trade the markets on CME because of the hours involved. Are there any plans to maybe bring in EUREX, seeing how, you know, you were a part of that whole thing?
So my wife was a bund trader for 10 years. So, you know, she's like, when we're going to do EUREX? When we're going to do EUREX?
Yes, exactly.
Yeah, so
But it's come to a point where, you know, I have a small prop trading company myself, but I don't have a challenge or anything. It's a very long process to actually get in. But yeah, so I was playing with the idea to actually come in with an evaluation and funded account that do have EUREX Astra degrees.
Yeah, I mean, we found that, you know, again, a function of feedback, having advertised into the European market, people have asked us, when are you going to connect to a European exchange? You know, a lot of these decisions are driven by one, access. So if TRADOVATE doesn't have access to the exchange, you know, we can't offer it, but they do fortunately have access to EUREX. You know, sometimes it's market data. So ICE Europe, where gilts and FTSE are traded, market data is so expensive, you know, so it's really, you know, so we can't offer it at our price point. You know, we might create an evaluation at some point, but you'll have to pay for the market data on the evaluation, you know.
Yeah, see, that's another thing that people never think about. They kind of come to do these challenges and everybody's kind of always criticizing, oh, but the bigger accounts, they're so expensive. It's like, yeah, but there are fees that a company has, which are astronomical, because we all have to run these enterprise level solutions. So naturally, there's a profit margin kind of thing. Yes, you can offer it as kind of like a charity, but at some point, the company's just not going to be
trying to make money.
Exactly. Everybody's trying to make money. We're a business, we're a service, but you know, there's a lot of stuff that comes with running a prop trading company that people don't think about. Back in the day when I was starting out, they actually had the trader paying for desk fees for Bloomberg terminal license, which was like $3,000 per month.
Yeah, my fee at GH. Well, I was clearing GH Financials, and they had a trading room on the where we after the floor closed. So on the floor, what you paid for, you actually paid for a lease to stand in the pit, a monthly fee. And on the smaller products, it's about £250 a month, and on the bigger products, it was something like 2,000. And then when we went upstairs, you know, you had infrastructure fees, which were your trading platform, like you say, maybe Bloomberg or CQG, whatever it might be that you're bringing in. It's a bit of, sometimes you had a bit of an a la carte menu. You know, I want to trade TT and I want my charts on CQG, and I want 2 PCs and 4 screens. But I think my bill in the early 2000s was like something like £2,500 a month just to sit down, you know. So, you know, we're giving people, you know, quite an opportunity at $150, you know, a month.
Yeah.
Just to answer your original question, yes, we're hoping to put EUREX in, and it'll probably be later in the year, though. It's not on the immediate development because we have some other things in the pipeline that we want to develop first. You know, like everything, there is a time constraint and you know, bandwidth constraint. So, but we really do want to put EUREX in.
Yeah. All right. That all sounds amazing. So I'm going to let you go. We're out of time and I'm slowly melting here as well. I want to thank you both for doing this interview. Steve and James are just going to do the sign off, and then I'm going to say goodbye to you after we finish filming. So stick around for a minute. Yeah. So traders, if you are looking for a company that's going to fund you live as soon as you pass a challenge, if you're looking to get paid out very quickly, and if you're looking for a scalable prop trading account, check out the links below this video and sign up for one of the trade day challenges. As always, thank you so much for watching, liking, and subscribing. Me and Astrid are saying goodbye, and we'll see you for the next one.